Welcome to Commodities, and here we're looking at gold, and we are looking for a rally. This is just the 61.8 retracement level here, so look, it's just a figure out of thin air, so to speak. Let's see how it develops, and the first development that we need is we need to see support on 1300, the closest largest number. Only support on that would see higher ground as such, so just drilling into that. We're looking at, the 61.8 retracement level from this move here back to here comes in around the 13.6, 13.7 area, which also comes in on this particular trend line coming through here. So a bit of a glass ceiling there, so to speak. So the move up through to here seems to be impulsive, meaning 5 waves. A little bit difficult to read in the sharp move through to here. After 5 waves, we'd get a 3-wave counter trend and then further upside there. So just drilling into that a little bit further there. The 5 waves up here for wave A, and we're looking for wave B to come back. The 61.8 retracement levels, the bottom end of this circle, and the 50% at this part of the circle here. However, the current move down through here is already in 3 waves. Yes, it could develop into 5 waves coming down. Let's just drill in and have a look at that. Oh, just one moment. So look, it can just move straight up from there. So a nice solid support on 1300 there. You could glean your first position, keep it very small, and look to add on top of 1303 and 1305, and then of course 1310. The third leg up here in terms of wave from wave B to wave C should be roughly the same length as wave A there. That's something to keep in mind, but trade the levels through group 1, and you know the routine through group 1 as well. The largest correction will be at the 1330, but each 10, 20 and 30 support on top of 30, not nice tested support, not just trading above it, will see even higher ground still. But normally trading from 1300, you would be looking at 1330 there. So just drilling in here, we can see that pretty much of a classic trading levels pattern as such here in terms of the arrival, the reaction, the first high above the level in 5 waves, and then we're looking for a 3-wave counter trend, looking for support back at the demand level here at 90. This is a little bit small, but it can run from that point there in terms of the ABC, but it's likely to get a little bit larger as such. It could be doing something like this here, B wave up here and a C wave down through here and then up through here. So look, if you do buy early and get trapped in here, you still need to keep the stop out of the way, so perhaps at 1283, because you want it under the 90, then between 80 and 90, the 85, 5 being the second strongest number in the market, would keep you out of trouble anyway for any sort of miscalculation in here, because corrections are tricky, and that's why we use the levels, which is always the closest largest number. That brings in the psychology of where all the orders are going to be sitting. So as we can see so far, it's retesting the 1300, so you wouldn't buy in here, because if there was going to be failure, it would be from here, and the sell orders building up from that point there. So I won't spend any time on the silver market, but look, if the silver gets support on 2000, it will move with gold a bit more sluggishly, so gold would be the better one. The copper market has still got further upside, and that's why gold can move up as well. So looking at wave 3 in place here, so from the low here, we're looking up for 1, back for 2, up for 3, 38.2 retracement comes in at 308, so it can bounce off 308. Wave 4 normally breaks the trend line in any market, so look for that, and if that's the case, then you know you're on the right track. Wave 1 and 5 should be about the same length, so we're looking about 315, 318. It might get pulled up to 320 depending on the support on 315, but expect a complicated correction of minimum 3 waves through here and then further upside there. The oil market, well, we can expect a bounce off the 100s, what we've been expecting. We can see that the first bounce has come in through here, off here, but there'll be more. The daily chart is deeply oversold, so we will see it snap back. You could probably buy on the 100 or close to it. Don't overtrade. We expect the move up to be corrective before we see another leg down. If we can just drill into that a little bit further through here in Elliott terms, we'd be looking at, it's a little bit dodgy this one here, but look, it does count reasonably well from all the way down. We're looking for wave 1, wave 2, and then wave 3 in 5 waves, all the blue ones here. Counts quite nicely to this point, but it could be this point. But I think this is the 1, the 2, the 3, the 4, and the 5, even though the wave 4 is a little bit higher here. A bit of a concern. It's not a beautiful picture, but anyway, the main point is that, you know, this bounce can start from the 30 here, the 130. I thought that was 30 there. Just check on that. Yeah, a little bit sort of lower here. I've only got sort of 3 waves up here so far, but if you get to see a nice clean 5 waves up, then you'll know you'll get another 5 up through here as well. But it could certainly come down here a little bit further. 3 A, B, C. Yeah, I'm not quite sure. I have pulled apart that, and I just don't have time. But I know the market is deeply oversold. So if you do buy the bounce, just, you know, keep it small and handle any heat that comes. Another positive for this market is the gas market. We were looking for an ABC pullback, and we were looking for it to pull back closer to, well, back down here actually, a lower correction here, but this is definitely an impulse wave up here. Impulse wave is 5 waves, and we can count from this high here, 1, 2, 3, 4, 5 for the A wave, an A and a B and a C for the B wave, and then little 5 waves here for the C wave. So the good news about this is that after 5 waves here, 3rd wave in the middle here, 4th and 5th up here, there'll be an ABC correction. So the A wave, the B wave, and the C wave. It would be pulling back 61.8% of this move here. It'd be nice if it does come down below our 72 number, and then find support on top of 72. That would be the point that you could build the trade in if you were entering new into this trade here, because our target to the upside is the $5. And yeah, look, everything is pointing to that in the bigger picture. The soybean market's into the grains now, the soybean market. Okay, so we're working across the medium level here, the 1500. We're looking for wave 3 high to be in here. We're looking for wave 4. We're looking for a minimum of 3 wave swing here. But most of the, you know, this wave 4, this correction here, they've all been pretty, you know, simple in their things. So we need to be a little bit mindful of this push up here. We were looking for a wave B up here in 3 waves, and we've got that. So if that's the case, we should see from wave B down to wave C in 5 waves, and we should see it in this about roughly the same length as this, maybe taking out these lows here, wave 4 breaking trend line. Yep, that's sort of what we're looking for, but we need to be mindful if this is going to run straight to the upside. Normally we would look at if the top of group 1, which is the always the 3, the 30 in this case, if the 1530 became the support, well then we would be trading long from that point, so we wouldn't want to miss anything. However, if I just drill in here, let's just take a closer look at this. In the move up through to here, we're looking at this as being an A and a B and a C wave up here, and completing and then moving down here in 5 waves. And the indicators are suggesting that, but we just need to be mindful that we don't get, the alternative would be 5 waves, 1, 2, 3, which would be the 1, 2, 3, and then back for 4, and then a new wave up here for 5. So if I just draw this out, because this is how we would enter, if wave 4 came down through here in some way here, and then wave 5 came up here, and we've had this 1, 2, 3, 4, 5, then we'd be looking for an A and a B and a C, and then we'd be looking to buy in here once we've confirmed this is actually 3 waves here with a move above, below, through here as such. So either way, we just need sort of it to unfold and fall into place, and then we can move from that point. Otherwise, we're looking back down here. We would be building the trade in back here, and this is kind of what I'm hoping for. I want to see a nice clean 5 waves down. Okay, the wheat market. Still a bit of a rock and a hard place. I mean, I wish this structure up here was a nice clean 5 waves here, so we could count it as wave 1 and back for wave 2, and then up for wave 1 and back for wave 2, and continue building to the upside. But it just counts better as 3 waves. So as I mentioned yesterday, it's possible that the wave 2 still got to come over to this area over here, because the 61.8 retracement level is still down at 630, 620 from memory. So this could still be the A wave to here, the B wave over to here in terms of the A wave here, B wave here, and the C wave here. And the C wave is always in 5 waves, so we still need this C wave to play out in 5 waves. Nothing much we can really do, but we just need to be mindful and diligent and act at the right time here. We do have a long trade in here already, but we'd be looking for support on the 700. So let's just drill in there and have a little bit of a look at that, because in both cases, a bullish scenario and a bearish scenario, the fact is that we're looking for wave C here, and wave C is always in 5 waves except in a triangle. So we're looking at the 1, the 2, then we've got 1, 2, 3, 4, and 5 here for the 3rd wave, and then the 4th wave here. The 5th wave won't go far because the extension's in the 3rd wave, so wave 5 and wave 1 will be roughly the same. I know that wave 5 will be larger than wave 1, but it's not going to go very far, and would peg it at the 710, 10, number 1 here, strongest number, so it shouldn't go too far past there. We do have a trend line coming through here too, just sort of pegging those tops there. So in both cases, we see the market move up through here. First of all, wave 4 could get a bit more complicated than just this move down here. Might jiggle around a bit, but we're looking for the high there. That's what we're looking for, a high above this one. Once that's in play there, then in a bullish scenario, we would see an A and a B and a C wave come back down, and then move up from there. And if that's the case, then we'd be looking for support on the 700 from there. We'll start building the trade in from that point there. If, however, this just came down through here and didn't find support back up here and just started to move down here, then we know that we're still going to come all the way back down here for, another large C wave for wave 2, really. So a long way to come down. But we just need to be mindful in this little area through here. That's it. So the corn market, right? Once again, we were looking for a B wave to move up. We're looking for an ABC for the A wave, the B wave, and the C wave back down through to here. So corn and wheat and soybean and coffee and sugar, they could all be in a bit of a downtrend here as well for a little while. Because we got 3 waves here, which is corrective, that means we'll take this high out. It's just a matter of when. It could do it straight from here and continue to move up, and we'll be looking at that too. If that's the case, we'll be looking at to move in. But we also need to be mindful that we are looking for a larger correction, an A and a B and a C here. But this move up through here is looking rather impulsive rather than corrective for a B wave. But either way, if it is 5 waves up here, once again, we'll see 3 waves back, and then we'll be looking for support on the 500. If we get that, then we'll start building in a trade up through this side. Otherwise, we'll just have to allow this to come. It will bounce off here, move back up, and then sort of like a ball bouncing off the ground here, so to speak, and move down here, a bit like sort of lower highs here. So anyway, let's just see what eventuates in here. Like I said, it does count quite nicely up here for for 5 waves. So, but either way, we should see some type of correction back here. Hopefully, we'll see it move back below the 500. Probably not, but if that's not the case, then we'll look to buy new highs over here. So, look, an opportunity for wheat and corn are on the cards. We just need a little bit of evidence for that. So a bit more patience. And look, the trend is going to be, from wave 2. This is wave 1 here, all the way up from here. Which we traded nicely, and we're waiting for the correction now. We just don't want to. The old cycle of making money in the trend and giving it back in the correction is an old one. It's a simple one, but it happens to us all the time because we get attached to the market. The trend is your friend, which is a bit overhyped, really, because you really need to detach yourself and really give this correction to create the next foundation for the next trend. So anyway, that's enough ranting about that. The story. So getting close. So be prepared, even if it's just one contract. The coffee market sort of going to plan as well. It's nice that, just going back over the daily here, we've got 5 waves up here now, and we're looking for an A wave, a B wave, and a C wave to move down. We're looking for a 3-wave swing. Don't worry about where I've got those, but basically we're looking for a correction down through here. We have been looking at that, and I haven't looked at it on the 5-minute chart at all just yet. Just have a closer look here. Yeah, it's all good. Still got more lows to go, so it will nail through. It will move through here. You can short it if you want, but better to become the retested resistance. So you don't trade the breakout here. You look for the retest back up here on lower volume, and if it is lower volume, that's the evidence that it's going to fade from that point. It may fade from this point up here, but it will continue to move down. So we're on the right track there. Nothing to do there for the time being. The sugar is a bit of a concern. We're looking to go long on top of 1700. We do have positions in here, and it's based off the fact that this is in 3 waves here. It's just that this whole move up here, be it on the May contracts or the July contract, it's just not showing a nice clean 5 waves up here. So the move down through here is in 3 waves too. So that's bullish corrective so far. If we have a look on, these are the May contracts here. If I have a look at the July contracts, we're trading a little bit higher. We can see that on the 1-hour chart here, the move down from the 18 here, 8's a profit-taking number, even number. So it's giving us the reaction here. It's giving it to us in 3 waves here. This is the 50-60% retracement level from this point here to this point here. This move up here is more like in 3 waves than 5 waves, but we'll give it a little bit of a chance to reveal itself. But I guess if this move comes, obviously if it takes a low out here, then it's bearish. But we don't want to see it breach the top of Group 1, which would be 1730 through here, and also past the midpoint, the 50 here. But I can see that it's obviously got a little bit more to come down through here. So look, it is showing a bearish picture here, but I can't confirm the bearish picture either, and I can't confirm the bullish picture either. So a bit of a rock and a hard place, but just want to observe it for a while. We'll get there. It's just at some points it's a bit tricky to read because the structure's not clear, and that's it. So we've just got to leave that on the bench. The orange juice market is moving down to wave 4, and we're looking at the 38.2 retracement level at 158. So 159 at the moment. So it's got a bit more to come down. We can see that we can see that part of it's in 5, it's not quite 5 waves, but it is in 1 wave, but it's actually in an A and a B and a C wave down here so far, but the 3rd wave's in the middle here, and this will be the 4th wave and the 5th wave. So we know that we're at the sort of the possible sort of ending of it through here. Yes, but it's got more scope to come down. That's the thing. And as I mentioned yesterday, if you don't want to handle the heat for where the stop is, then you would have been exiting above the 160 there. So, all right, just on the 15-minute chart. Here, okay, here we go here. So I just wanted to point this out here. So from this high here, we got 1, 2, 3, ABC for the fourth here, and then we're looking for the fifth to come down through here, but we still got this move down through here. So I was looking at this being hopefully an A wave, a B wave, and all of this being the C wave here, and ending at 158 and moving back up onto the 160 there. If that's the case, we can look to buy on the 160 there, but it could certainly turn into an impulse wave, which is giving us 5 waves down. So that's the dilemma there. So if you can't handle the heat, then I suggest moving out of this on, yesterday and today, because it could certainly come down further. This is the May contracts. The July contracts can come down further as well. The July contracts were trading at 163 now. Could move down to 160, the fourth wave of 1 lesser degree. Right, okay, well that's it. Alrighty, cheers.